The stock market's beginning to pull back. We've seen stock prices, if you look at the S&P, go down by close to 4% from March 28th, high down to current levels now. And that pullback is good. Stock prices were too high, and it's good to have a correction. It's good to see stocks, especially the stocks that were flying up and really didn't have the fundamentals to support the prices that they were trading at, come down. And I think we still have some more room to go down, and we should see prices continue to go down. There's plenty of fear, there's plenty of doubt, and if anything, the momentum downward is really increasing. So we'll see how things sort out over the next couple of weeks, how far lower we go. I wouldn't be surprised if we go down a total of 10 to 15% before we are done. I wanted to go through a list of stocks that I have that I'm avoiding. And this is a short list. I mean, you can look at thousands of stocks out in the stock market that maybe you would want to stay away from. These stocks are stocks that I've analyzed, I've done evaluation on. In some cases, I've tracked these stocks for a couple of years. So I'm willing to express an opinion. And this opinion is just for my portfolio. I never recommend any stock to any viewer. Everything that I share is just my journey as an individual value investor. The things that I'm doing for my portfolio, the valuations that I'm coming up, and the opinions that I have on a particular company and a particular stock. The goal is just to share my viewpoint. Hopefully you find it interesting. The list that I have, again, it's just a short list of companies that I've thought were worth, taking a look at. And I came up with pretty short valuations. In some cases, these companies have really lost a lot of value. And I'll comment on those companies that I think once upon a time, they were worth a lot more. And now their valuations are much lower, which is interesting. So let's get into the list of stocks that are not the right stocks for my portfolio at this time. The first stock that I'll cover is Tesla. Tesla is a stock that I owned for a couple of years way back when, and it did really well for me. And I think Tesla is a great company. I think they should receive a lot of credit for really innovating, creating the EV industry. But the reality is that they were way overpriced. My best estimate, and again, it's my individual opinion, is that they're being sold at a premium of 63%. Even having fallen a lot, that's their valuation. A lot of investors view Tesla as a technology company. I don't. I view it as a premium car company. I view them as potentially the smartest car company there is out there. But you can't take car company out of the description of the company. And once you do that, there's a lot of other alternative car companies like Toyota, Ford, that you can get a great value out of. That said, I believe that Tesla is a stock that I need to avoid. The next company is Taiwan Semiconductor, and this one's bittersweet. I made a lot of money on Taiwan Semiconductor. This was a multi-bagger for me a couple years back. I was able to get out of the position before they really went down in value. And this is the biggest semiconductor foundry in the world. They operate out of Taiwan. For some reason, just the free cash flows they produce just went way down. And that really affected the valuation that I have for TSM. I've kept an eye on TSM, for years. And right now, I think that they're being sold at a premium of 55%. So it's just not the right time for me to buy TSM. CrowdStrike is the next company that I think is too high priced for my portfolio. I think they're being sold at a 49% discount. It's really impressive to see CrowdStrike grow at the rates that they're growing. And they are growing their free cash flows. But at the end of the day, I need to value the company and buy at a discount. And I just don't see how I can get to the value of the market cap of the company. I give them a favorable growth rate. I give them all the favorable metrics I can, but I only come up with a particular value for the company that falls way short of the current market cap. The next stock is Microsoft, and this company is great. Biggest market cap in the stock market, deservingly. It's a great company. Just the stock price is too high. The best valuation I can come up with doesn't come close to their current stock price. And I give them favorable metrics. So I'm going to stay away from Microsoft. I think there's too much AI hype in Microsoft. Amazon is next on the list, another great company. I owned Amazon and sold it recently at a big gain. Just the premium that the stock is being priced at was too high, and I took a pretty good gain on Amazon. I respect Amazon holistically. I think they're a great business. I do think that they're in too many businesses, and that's going to come back to haunt them. They put a lot of capital back into their business, which is a good idea to keep growing, but it's a lot of capital they have to continue to put into this business to make it work. I could see the stock really coming down. It has before, and we'll see. I could be wrong, but it is an expensive stock that I'm going to stay away from for the time being. NVIDIA, what a great company. And disclaimer, I missed NVIDIA, and I'm sure everybody who did is kind of kicking themselves. what a great rise for this semiconductor company. I give them just a great valuation with the most positive fundamentals I can with regards to free cash flow, growth of earnings per share, and I cannot construct a valuation that's close to their current stock price. The stock price is incredibly high, and I would say it may follow the same pattern that Cisco took in the dot-com bubble. Cisco was a great company, continues to be a great company, and they had an excellent technology, number one in the market. And investors just got carried away and they priced Cisco way too high and it collapsed. Even though the company kept growing their profits, kept growing their free cash, the stock was just a stinker because it was overly priced. It went parabolic. And if you study the graphs of Cisco and Nvidia, they look almost identical. Broadcom is the next company. I owned Broadcom and sold it recently. It really took a ride up with all this AI hype, and I gladly took a big gain on Broadcom. The thing about AI and the thing about semiconductors is I don't know how much longer the AI build out is going to be. There's no real business out there that I'm seeing just yet where somebody's monetizing AI. So how much more will businesses invest in their infrastructure? I'm not quite sure. The other thing about semiconductor is that it's a cyclical industry. It has its ups, it has its downs. Yet both Broadcom and Nvidia are priced as if they're just going to keep growing for the next 10, 20 years. That just isn't the semiconductor industry. Having said that, again, I'm glad I had a big position of Broadcom that I sold at a big gain, and now I'm staying away from that stock. Palantir is the next company, and I've been following Palantir for about a year, and I just cannot get the valuation up high enough to see that this stock is fairly priced or discounted. I think it's an interesting company, but I would not be surprised if their business really takes a turn for the worst when other bigger software companies catch up to what they're doing and pretty much replace them. Because at the end of the day, these big companies or governments like to really pull together their investment in technology and buy from one big player. And Palantir, I think, is at risk at one of the big software companies taking their market share. Digital Realty Trust is a real estate investment trust that happens to own data centers and rents out that data center space to technology companies to run their operations. I owned the stock and sold it at a gain. I saw it really take off, and it's the AI hype. It's really affecting them. It's expected that they're going to have very high growth, which I agree. They're probably going to have some growth. But the valuation that ended up being placed on this company based on their market cap was just too high. So I sold the stock, and I'm staying away from DLR for the time being. Enphase is the next company I'm staying away from. Enphase is a stock where I lost some money and have been bitten once, so twice shy on this stock. The company seems to be operating well, but the valuation of growth companies right now is being really pushed back with high interest rates. Also, solar may have a headwind on growth because some state governments are no longer funding much of the installations and giving really attractive incentives for homeowners to install solar. We'll see how things pan out, but I'm staying away from Enphase for the time being. LiveNation is being sold at a premium, and I'm going to stay away from it. Every time I value LiveNation for the last year or so, it's just been too high priced. And I am following the stock because it seems like concert goers are just excited to go see shows and go see concerts. Now, that's definitely true, but I just can't get the fundamentals behind LiveNation to be valued high enough to buy LiveNation at a fair price or at a discount. And the last company is Union Pacific, a railroad. And this railroad is owned by a lot of super investors. It's a really respected company. And I've been tracking it in hopes of finding a time when I can get it at a discount. So far, I've come up empty for a couple of years. And right now, I think it's being sold at a premium of 19%. And I will be patient and wait until it drops at a good discount before I buy Union Pacific. Many of the companies that I covered are great companies. They're awesome companies. Just their stock prices are too high. And I'm an active value investor. I want to buy stocks at a discount. And if I'm patient, I will get a discount over time on some of those companies. It's happened with Meta. I bought shares in 22 that were incredibly discounted. I bought shares in Amazon that were incredibly discounted, and then I took a big gain. I bought shares in Broadcom that were incredibly discounted, and I got a big gain. So I'm going to be an active value investor and really buy when the price really suits me. Be patient and wait for the market to sell off. We're currently in a sell-off. I don't know how steep it's going to be and how much longer it's going to go for, but we'll see how values change with these companies and other companies. But I think it's a good time to be looking for good discounts and be buying stocks at a discount. I hope you found my video interesting, and I appreciate you watching.